The FS Academy, and I'm so happy to have every one of you here in today's lesson. Okay, so today's lesson is going to be on a request someone actually made on YouTube, and so it's going to be on directional bias. Okay, so I'm making this video to explain the concept of directional bias and how to make it a lot easier to determine. Okay, so if this is your first time of coming across this channel, please do well to subscribe, turn on the notification bell, and for more weekly content, for our weekly content. Okay, so I'm going to break this into two. I'm going to make this directional bias of a topic in two sessions. Okay, so I'm going to create it in two sessions, right? So this is going to be the first one, and I'm going to do a second series on it as well, and I hope I'll be able to make the concept clear and understandable to every one of us. Okay, so I'm just going to name this directional bias. Okay, so before we get down to the business, so with that being said, okay, so down to today's business, the question of directional bias is really a huge topic. Okay, so I've come to realize that the market is all about pointing the right direction. Okay, if you are able to point the in the right direction that price should be going to, okay, in other words, if you are able to point the right direction at which price is heading to, that alone uh, gives you hedge over the market, gives you a huge hedge, gives you a high winning, a kind of an advantage in the market. Okay, so the market is all about trading is all about pointing price in the right direction. It's all about pointing the right direction that price is intended to go for. Okay, so once you have your direction in mind, that will reduce, in other words, give you some kind of advantage. Okay, so the topic of directional bias, I've come to realize something. Whatever I share with us on this channel is actually based off two things, right? First, it consists of few things that I've picked from ICT's mentorship, and not few actually. It compares of things that I've picked up from ICT, and compares of things that I have learned through experience. Okay, so there's one thing is to, to be taught smart money concepts. Okay, one thing is you can learn smart money concepts from anywhere. You can learn from here, you can learn from ICT himself. Okay, but the other thing is for you to put in the work. Okay, for you to put in the effort to, to bring out and to practicalize what you have learned so far. Okay, so with that said, the concept of directional bias, we always remember we start our analysis from the weekly time frame. Okay, so I'm just going to cover it from the concept of a a newbie standard. Okay, a beginner standpoint of view. Okay, so now remember we start our analysis from the weekly time frame. Okay, so now this is the weekly time frame, right? So I'm just going to do some quick mark on it. Okay, so now this is the fair value gap we reached into on the premium sector, and at the same time grab liquidity from this old high, then price took off the opposite direction, lead reaching for uh the opposing liquidity. Okay, now when we talk about directional bias, there are two ways you get your directional bias. Okay, the one way is for you to determine what price is reaching for. Okay, what price is reaching for. Now as we can see clearly here, we are very sure that price is reaching for this old low right here. Okay, price is reaching for this swing low right here with the sell side liquidity resting below it, right? So now that alone gives you a directional bias. So what do I mean by that? Until price gets uh to this particular low right here, your bias is going to be bearish. Okay, so in other words, you are going into the marketplace every day looking for, expecting you know, expecting bearish days. Okay, you are going to the market expecting bearish days, and your bias is going to be bearish. Okay, so let's say for the fact where when price was still reaching for this fair value gap, okay, our bias was bullish. Okay, until we reached for this fair value gap, we went into the marketplace every day with the expectation of looking for buy setups only. Okay, so we went to the marketplace with the expectation of looking for buy setups only. Okay, so same thing can be said for this bearish bias. Okay, so until price reach for this old low, your bias is bearish. Okay, so you are going into every day, you are going into the chart or every day with a bearish bias. Okay, with a bearish bias. Okay, so you know that was what I'm trying to say is the fact is that you have to be able to determine the the direction of on the higher time frame, on the higher time frame premises. Okay, you have to be able to understand the narrative of the higher time frame, so that way that gives you an edge on what to do on every day. Okay, so if you can, if you are able to understand or rather to determine the direction the higher time frame, for example the weekly or the daily time frame where it is reaching for, if you are able to point the right direction, the price that price is heading towards, that alone will be able to give you your directional bias. Okay, so in this example we can clearly see that price is reaching for the liquidity resting below this old low. Okay, so until price gets to this old low, my bias is bearish on Australian USD. Okay, so every day I'm going into the charts, into the into every day I pull up my charts, I'm looking for sell scenarios, I'm looking for sell setups, I'm looking for bearish setups, nothing more than bearish setup only. Okay, it doesn't mean that you are not allowed to take you are not allowed to take buy setups. Okay, you can as well trade against the, you can trade buy setups. Of course there are going to be up days even when we have a bearish a bearish trend. Okay, there are as well going to be up days. Okay, there are going to be up days, so you have to just be flexible, but the overall and the overall narrative that you are sticking with is that you are expecting price to reach for this old low, right? So until price trades below this old low, your bias is bearish, and what you are going to do is you are going to be looking for sell setups throughout the week. Okay, you are going to be hunting for sell setups throughout the week. So that is one way to determine your daily bias, on a regular basis. Okay, is just to identify what price is reaching for, where price is reaching for. Okay, point, if you are able to point the right direction that price is reaching for, till price gets to that specific level, or until price gets to that specific level that you are anticipating it to reach for, you will stick with that bias. Okay, so now I'm anticipating that price should be reaching for this old low, right? So until price gets down to this old low, my bias is bearish. Okay, in other words, I'm going into every day, every trading day of the week looking for sell setups, looking for bearish setups. Okay, that does not mean I won't take long positions, but I'm generally sticking with the overall trend, with the overall order flow, which is bearishness. Okay, so now that is one way you get your direction, your daily bias. Okay, I hope I made that clear. Okay, I hope I'm able to make that clear. So that is one way. Okay, so now my current outlook on the Aussie dollar right now is that price has just broken structure. Remember I talked about this in the previous video that we are having, prior to this week, okay, we were having a bullish weekly. So this week, last week's trading week, okay, this last trading week that just passed, okay, we were still very much bullish. We were having a bullish weekly trend and a bearish daily trend. Okay, so I made mention that one has to get in sync with the other. Okay, and I was actually looking at this old low for a liquidity grab and maybe a resumption on the upside to the upside, or either way a break in structure and a continuation to the downside to reach for this sell side liquidity. Okay, so I was expecting one of those two things. Okay, so actually what we got instead was a break in structure. Okay, as we can a shift in market structure. Okay, as we can clearly see here. Okay, so this is a swing low that has just been, broken to the downside. So price is generally reaching for this, is obviously reaching for this sell side liquidity. Okay, so now how do I get my bias? And so what is going to be my bias for the week is I'm still bearish. Okay, I'm still bearish until I get here. So in other words, my everyday trading of the week is going to be to look for sell setups. Okay, it's going to be to look for sell setups. Okay, so that is what I'm going to focus on. That is the bias I'm going to focus on until price trades below this old low. Okay, so that is one way, like I said earlier, how you determine your daily bias. Okay, that is how you determine if you are selling for the day or you are buying for the day. Okay, so that is just one way of doing it. And so now the next thing I'm going to look for is that if I'm expecting prior to this week, as you can see, price just broke structure and we have a weekly fair value gap. Okay, if at all I'm going to expect we are going to see some kind of retracement, it should be right back into this weekly fair value gap to continue lower, because the price obviously, as you can see here, is just expanding to the, just expanding without any form of retracement. Okay, so probably this week should see some kind of rest in the marketplace, some kind of, retracement of sort, or it could just possibly reach for the old for this sex side liquidity, right? So we might see some retracement back into this fair value gap and a continuation to the lower side, or we might just see it might just be in one way run through to the sell side liquidity. Okay, either way, having a general bearish bias in mind. Okay, I'm having a general bearish bias in mind that price is going to take out the sell side liquidity resting below this old low. Okay, so that is just what I have in mind for this weekly trend for Aussie dollar in this new week. Okay, so now the second way to discover your daily bias, of course, is by using the DSY, the US dollar currency, okay, index. Okay, that is for forex market, for forex pairs. Okay, so that, and not just any pairs, any for the major pairs that are paired against the US dollar. Okay, in other words, the currency pairs that have the that have the US dollar as their quoted currency. Okay, for example, the Euro USD, the Great British Pound USD, the Australian USD. Okay, those three major pairs are going to do exact opposite of whatever the DSY is going to do. Okay, in other words, this having in mind here, or in other words, the trend that as we can see right here is currently bullish on the DSY, is going to be a reverse for the it's going to be an opposite move for the pairs that are paired against the dollar index. Okay, in other words, having a bullish DSY is going to give us a bearish Euro USD, a bearish Australian USD, a bearish Great British Pound USD. Okay, so the movement is going to be opposite, right? The movement is going to be opposite. So that is one way to determine your daily bias. Okay, so let's say you are unable to point to the right direction of let's say Aussie dollar, for example, we are unable to point to the right direction of where price is currently headed to. Okay, one of the other ways you can do that is simply look at the trend of the dollar index. Once you are able to pinpoint the direction, the current trend on the dollar index, you will that way you can determine the direction of the Australian USD, of the Euro USD, and of the Great British Pounds USD. Okay, so in this case we can see clearly that our dollar index is bullish. Okay, hence that is why we are having a bearish Australian dollar, right? So there are going to be exemptions, though. There are going to be some times where there are going to be crack in correlation. So that is the flaw that is associated with using this method. Okay, that comes with using this method. In other words, there are going to be times where the dollar index is going to be bullish, and maybe Australian USD is going to be bullish at the same time, whereas GBP USD might be bearish and Euro USD might be bearish. Okay, so there are going to be times when there is going to be something like a crack in correlation, but in this example right now we can see that it is corresponding well, like it should. Okay, so the Australian dollar is currently bearish, okay, and the dollar index is currently bullish. Okay, so it will be a vice versa for when the Australian dollar is bearish, the Euro USD is going to be bullish, Aussie dollar is going to be bullish, Great British Pound against the dollar is going to be bullish. Okay, so that is one way to determine your bias again. Okay, so with that, having that in mind, okay, you can decide to go into the trading day looking for, looking for the setups. Okay, looking for your based on the bias you are having, that is what is going to determine the setup you are going into the every trading day that you are going to be hunting for. Okay, in other words, if you are expecting price to expand lower on the weekly time frame or the daily time frame, then you should be looking for self setups on every trading day of that week. Okay, that doesn't mean you are not permitted to take a buy setup. Okay, you are not that doesn't mean you are not permitted to take a buy setup. You can take a buy setup. Okay, you can trade against the order flow, but you have in mind, you should bear in mind that your overall trend is bearish. Okay, so that is the second way to determine to get your directional bias. Okay, so now we have, this is the daily time frame. Okay, now this is that old high that price grabbed liquidity from and reached into the weekly fair value gap, right? So now this is the break of structure on the weekly fair value gap, and as you can see, price just went one way. Okay, so this is kind of huge displacement, right? So this was what I was referring to earlier, that price may decide to rest on this week. Okay, might decide to reach back up into this fair value gap. This is a weekly fair value gap. Okay, this is that weekly fair value gap right here. Okay, so price might decide to give a little bit retracement, creating bullish days on a bearish trend. Okay, so price might decide to correct this move, because this is just one impulsive move down, right? So price might likely decide to correct this move, create a little correction, a little retracement before smacking down to take out the sell side liquidity, resting below these old lows, right? So I'm still having the bearish bias in mind, right? I'm still having the bearish bias in mind, but I'm flexible with it. It doesn't mean I am not permitted to take long entries. Of course, I take long entries even on bearish trends. Okay, I take long entries, and the next video is actually going to talk about the long entry I took last week, on the previous week, right? So I'm going to talk about that on the next video. Okay, so this video is going to be on sticking with the trade, right? So now this is on Tuesdays. This is on Tuesdays, right? This is on Tuesday, and April 30th, as you can see here. This is on Tuesday. Oh, sorry. I don't think this date is right. It should be somewhere around your higher time frame narrative, your bias from the higher time frame perspective. Okay, now we are going to talk about how to trade your bias, how to trade your directional bias, how to trade in the direction of the higher time frame. Okay, so in this example, in this case, we are having a bearish bias. Okay, so our bias is bearish, so in other words, we are going into our everyday trading looking for sell setups. Okay, so now that is where the ICT power of 3 comes in. That is where ICT power of 3 comes in. Okay, I've actually talked about the concept of power of 3. Okay, you can as well check the previous videos for more understanding. Okay, but I'm still going to talk about it briefly on this, and we're going to talk about it briefly. Okay, so now the ICT power of 3, as we know, is accumulation, manipulation, and distribution. Okay, I actually don't have a diagram of it here, but it's actually on the previous video. Okay, so once now, how do we apply the power of 3? Okay, once you have determined your directional bias, okay, the next phase you go into is the application of the power of 3. Now for bearish days, our our what we want to see in price is price to open, trade up first. Okay, we want to see price open, trade up first, and drop. Okay, in other words, we want to see price open up, which is the accumulation. Okay, we want to see the manipulation, which is in an up move first, then we want to see the distribution. Okay, so in other words, our high probability setup for bearish days will be to look for sell setups above the opening price on the 12 a.m. New York midnight. Okay, so this arrow is actually pointing to this candle, which is the New York midnight. Okay, so you draw that out in time. This is our opening price. Okay, so now remember, my setup, my directional bias is bearish, right? So I'm looking for sell setups. Okay, so in other words, my probability setups, my high probability setup will be to look for my entries above the opening price, right? So my high probability setup is to look for sell entries above the opening price. Okay, for because the price open, this is our accumulation, right? So we should see some level of manipulation, then distribution. Okay, so but in this case, as you can see on this day, this is my London key zone. Okay, so what key zone actually means is when we start looking for our entries, when we start hunting for our entries. Okay, so we start hunting for our money, for our entries on the London key zone between 2 a.m. New York time to 5 a.m. New York time. Okay, so this is my London Q zone. So this is when I start hunting for my entries, for my sell entries on my bearish days. Okay, so I'm actually looking for a kind of a run on liquidity. Okay, I'm looking for one of the two things. I'm looking for a run on liquidity, or I'm looking for a displacement with a break of structure. Okay, so once you have your bias in mind, the next thing that comes to your mind is the next phase is the application of the power of 3. Okay, so for bearish days, it is accumulation, manipulation, and distribution. Okay, for bullish days, your high probability setup will be to look for your buy entries below the opening price. Okay, while for your bearish days, your high probability setup should be to look for your sell entries above the opening price. Okay, so but in this case, in this scenario, we have price open up right here, right? Then we have a huge displacement downwards. Okay, so in other words, I was expecting an old high to get taken out, okay, above the opening price. I was expecting a run on buy side liquidity, and before the market breaks down. Okay, so let me go down deeper, let me go down further. Okay, what I mean by that. So now in this case, we can see this is the London key zone, right? So I'm looking for my first entry on the London session between 2 a.m. New York time to 5 a.m. New York time. Okay, so this is my opening price. As you can see, price came up, trade upwards, but didn't go above this old high. Okay, and we are not even yet in our key zone. Okay, remember we start looking for our entries in our key zone. Okay, so whatever you are trading, whenever you are looking for your uh whenever your the best time to start hunting for your entries is inside your key zone. Okay, it should be inside your key zone time window. Okay, so that is between 2 to 5 a.m. for London key zone, and 7 to probably 10, 11 at most. Okay, for your New York key zone. Okay, so remember all time are in the London time zone. Okay, so now getting to my London key zone. Okay, this is when I actually put up my charts. I actually sent an alarm on my phone to to the London key zone open. So once I get my alert, that is when I open up my computer. I come up to my desk, my trading desk, and I start my trading for the day. Okay, so now when I actually put up my charts during the London Q zone. Okay, none of this, I was not around when all this happened. Okay, I was not where I actually came and I saw this. Okay, and I saw this, and I just saw this move. Okay, so now I did my annotations. I you know delineated the New York uh midnight open. This is my opening price. Okay, so this is my London or key zone open. So price was just dropping one way. Okay, so now something draw my attention. Okay, so now remember we are looking for one of two things, right? We are looking for displacement or a run or sell side liquidity for our buy side, for our bearish days. Okay, so now we have the opening price right here. So I was actually expecting this old high prior to, because this is the first swing high prior to the London open. Okay, so our London Q zone open. Okay, so I was expecting this hold. I was expecting a move above this old high to take out the the buy side liquidity resting above this old high, then drop. Okay, so I was expecting that. Okay, and but in this case we didn't have nothing like that. Okay, we saw nothing like that, right? We just saw price breaking down in structure. Okay, so taking out this short term low. Okay, this is actually a swing low as well. Okay, but I decided to use this because these two swings lows are inside of this short term low, right? So price broke structure to the downside massively. So I was just watching, I was just sitting all through. I did nothing here. Okay, but something actually grabbed my attention, and I'm going to show us in the next slide. Okay, so now I want you to take a close look at the at this price action. Okay, so now notice how I turn off the wicks of the candle. Okay, so I want you to take a look at this is the same uh price action data right here. Okay, so we have this wicks, we have this swing high, we have price create this high, low, creates another high, and before a break of structure. Okay, now I want you to see how it looks like without the wicks. Okay, so actually you can see right here that price created a high, a low, a higher high, and broke down. Okay, so but this was before, this was prior to the London session. Okay, so none of this had happened, or sorry, all these had already happened before I put up my chart. Okay, as you can see, this is when my London session started on this candle right here. If I'm not mistaken, it should be on this candle or on this one. Okay, so now something actually struck my mind, and I saw the swing point I talked about. Okay, remember the swing points we talked about when price is actually indicating the end of an uptrend. Okay, so now remember prior to this down move, price was just trading upwards, was going up. Okay, was actually in an uptrend. Okay, so now what this actually means is that this swing point here indicated that this trend is about to come to an end, right? Indicated that this trend is about to come to an end. So we had a high created, a low, and a higher high. So what happened was that the buy stops that were resting above this old high right here, okay, we actually tripped in, right? We have probably buy stops that were resting above here. Okay, so as price created this short-term resistance, there are going to be those retail traders are going to put buy stops to get in the trend, right? So once price broke this short-term resistance, there are going to be those that are going to buy this as a break and retest, right? Those that trade horizontal support and resistance are going to see this as a break and retest of support of resistance turn to support, right? So and those that place their buy stops are going to get in going long, expecting the trend to go up, right? So now we have two traders right here. We have those that had their buy stops, and we have those that bought this as a short term, as a resistance turn support, right? So their stop loss is going to be below this old low. Okay, so now what do we have here? We have price breaking structure to the upside and creating these two sweep patterns, right? So we have the first pattern, we have the first part, we have a high, a low, and a higher high, and a break of structure to the downside. Okay, so now this is what I actually came to see. Okay, so I saw the second swing point be formed right here. Okay, so I saw this high, this low to this high, right? And I saw a lower low and a lower high and a shift in structure. Okay, so this is a failure swing, right? This is a failure swing. Price failed to go above the previous old high. Price failed to create a higher high, right? And broke down in structure to the downside. Okay, so price shifted in structure. There was a huge displacement here. Okay, so what do? We look for our entry between this swing high and this low. Okay, in other words, we look for our entry between this high and this low. Okay, so now, and this is a huge displacement, right? So this is a huge displacement. So how did I filter it out? Okay, how did I filter it out? Okay, so now coming back to our turning back on the wicks. Okay, so this is how I actually filtered it out. Okay, so I brought out my fib and I measured the high to the low, right? I measured the high to the low, and I was more interested on this 15-minute fair value gap, right? So this was a displacement, this was a huge displacement created. Okay, so we have a fair value gap right here as well, and a fair value gap right here. So I was expecting the markets to reach back into a premium, into the premium side. Okay, so remember, I'm looking for sales, and I'm going to be selling in premium, in the premium sector, right? So I'm looking to sell at premium and buy at discount. Okay, so now price drop created a huge displacement. Okay, and started retracing. So I brought out my fib and I was interested in this. I was waiting for this fair value gap to be reached for. Okay, so now you can see we got we actually got in right here. Like price reached into the fair value gap here, but I was like, okay, let me just wait for the New York Q zone. Okay, let me just wait for the New York open Q zone. Okay, so I was patient. I was just seeing this until the New York Q zone opened. Okay, so now dropping that to the 3-minute chart, right? Remember I talked about how to go lower to the next time frame. Okay, how to go down to a lower time frame looking for our entries. Okay, I talked about that in the previous videos. Okay, so as you can see, the same pattern was created here. So price first reached into the fair value gap right here. Okay, and there was not really much breaking structure because this was our structure right here. Okay, so price traded down a bit and came up and created the same pattern, right? So we have a low, a high, a low, and a higher high, reached for liquidity. Okay, reached for the liquidity right above here, grabbed liquidity and created a huge displacement, right? So this was our pattern being created the second time on the lower time frame. Okay, so have you I know most of us have heard about price being fractal in nature, right? In other words, what happens on the higher time frame tends to happen on the lower time frame as well. Okay, so now price reached for this liquidity grabbed liquidity and went the other direction. Okay, so this is where I actually got in, and I was already in within my New York key zone, right? So my New York key zone, I was in my New York key zone, and price has already reached for the 15-minute fair value gap and created the swing pattern. Okay, the swing and grabbed liquidity. Okay, grabbed liquidity, broke down, created a huge displacement. So this will be my order block, right? These are the last consecutive candles, up close candles before this whole move. As you can see, price reached for the order block right here. Okay, so this is my order block. Okay, so this is where I got in, and my stop loss was above here. Okay, so now in terms of the profit target, what I actually did was ICT talked about this the previous in one of his recent videos. Okay, I don't actually know which of the episode, right? But I was hoping I got in right here. Okay, so I was hoping to reach for the external range liquidity, because between this range trading range low to this range high, this is just viewed as one price leg, right? So I was hoping to, because we are very much bearish, right? We are still very much bearish, and the chances of this low getting take out was very high. Okay, so the chances were very high, and I was like, okay, I was that's why I targeted this external range liquidity, because between this range high to this range low, these are all internal range liquidity, right? So price trades into the a premium array and should reach for some level of discount, right? So that's why I targeted this external range liquidity. So price, as you can see, gave us 76 pips, right? 76 pips, uh with a risk reward ratio of 10 to 1, right? 10 to almost 11 to 1. Stop loss of 7 stop loss, and 76 TP. So this was the first trade I actually caught on Tuesday. Okay, this was the first trade of the week, and as you can see, it went off smoothly and very nice. Okay, so now what are the takeaways of this video? What are the takeaways? What are the main key points I'm trying to talk about right here? Okay, so the main thing I want you to take away from this lecture is that to have your daily bias, to know if you are going to be selling this day or to be buying this day, you have to be able to pinpoint the direction that your higher time frame is trading to. Okay, in other words, you have to be able to understand where your higher time frame what your higher time frame is reaching for. Okay, so remember, price is reaching for one of two things. Price is reaching for liquidities or imbalance. Okay, or imbalance, right? Price is reaching for liquidity or imbalance. Okay, so we saw that in this example. Okay, when price was expanded to the upside, okay, I talked about it in my previous videos, that price was reaching for the liquidity, resting above this old high, and to refill this imbalance, right? So now, how do you get your bias? Okay, so once you understand what price is reaching for, okay, so the direction it is trading towards, okay, the direction it is trading to, that is your bias. Okay, in this example, we have price reaching for this old low, right? So as you can see, price is trading low. Okay, so that is bearishness. So my bias, my everyday bias, is going to be to look for sell entries, right? So I'm going into the trend, I'm going into the markets every day, looking for sell, looking for sell setups, right? So that is your bias, that is your daily bias. Okay, that is how to determine your daily bias. Okay, by understanding what the higher time frame is reaching for. Okay, your higher time frame can be the daily time frame, it can be the weekly time frame, right? So it doesn't matter. Okay, but I just like to start mine from the weekly time frame. Okay, so I like to start mine from the weekly time frame, right? So price is probably reaching for this old low right here. Okay, so my bias is going to be bearish until price gets to this level. Okay, it might decide to go further, it might decide to go lower. Not It might decide to go lower, I don't really care about that. Okay, but once price gets to this level, what do I do next? Okay, I'll probably move to the sidelines and observe. Okay, and I'm going to observe price to give me further evidence that it wants to continue to go lower. Okay, so until price gets to this level, my bias is going to be bearish. Okay, and I'm going to go into every trading day, looking for sell setups only. Okay, entries. Okay, you can take sell setups, you can take sell entries, and that is where the next phase is to compare it with your DSY. Once you determine the direction of the DSY, you should expect an opposite move of the euro USD, the GBP USD, the Aussie dollar. Okay, so now once you are able to do that, then every trading day you apply the power of three. Okay, if your bias is bearish, you should expect the accumulation, okay, the distribution, the manipulation, sorry. So your high probability setup will be to look for your sales entries above the opening price, right? Okay, so in other words, I talked about this in my previous videos, and I hope I'll be able to, make it understandable to you. Okay, so I'm going to do the next video on taking on trading against the trend, okay, on taking buys setups on bearish days. Okay, so I hope this explained it. If you have further questions, you can actually leave the comments and I'm going to attend to it. Thank you very much for joining us. Have a good trading week, guys. See you in the next class.